You're probably paying more tax than you owe, not because the law demands it, but because you don't even know what the law is giving to you. The Nigerian Tax Act exempts certain businesses and individuals from tax entirely. Most people do not know this. Here are three exemptions you should know about. Number one, small companies. Under the law, small companies pay zero company income tax. What is a small company? The law states that a small company is a company that has a gross annual turnover of 50 million naira or less and a total fixed asset that does not exceed 250 million naira. Now, quick note on these two figures. Gross turnover is the totality of what your business earns before any deductions. So it is not your profit, rather it is your total revenue. While total fixed assets are physical things that your business owns to operate. For example, machinery, equipment, vehicles, buildings, and the likes. And the totality, the combined value of these assets must not exceed 250 million naira. And it is important to add that these two conditions must be met: the gross annual turnover of 50 million naira or less, and fixed total assets not exceeding 250 million naira. Another important thing to add here is that if your business provides professional services, then this exemption does not apply to you. So, for lawyers, accountants, doctors, and the likes, the law specifically excludes businesses offering professional services from the classification of a small company, regardless of your turnover. In addition to the exemption enjoyed by small companies, they are also exempted from paying capital gain tax and development levy. Number two, individuals. If you earn 800,000 naira yearly or less, then you are exempted from paying personal income tax. Now, under the law, the first 800,000 naira of your taxable income attracts zero personal income tax, but any amount above 800,000 naira would attract a progressive tax rate. Three, personal asset sales. Under the law, if you sell your personal belongings, say furniture, electronics, household items, and the total proceed does not exceed 5 million naira or three times the national minimum wage, whichever is higher, then you do not pay capital gain tax. Currently, 5 million naira is the threshold because apparently it is higher than three times the national minimum wage. One important thing that you must note is that you cannot split sales in order to avoid this 5 million naira threshold. If you sell multiple items to the same person, the law still treats that transaction as a single transaction. If you sell the house where you live in, say your primary residence, the gain you realize from that sale is also exempt from capital gain tax. However, this exemption is only available to you once in your lifetime. In part 2, I'm going to show you how to legally reduce the tax you owe, including deductions, allowances, and reliefs provided by law.